Welcome to all of you. It is a pleasure for me to welcome you to our More Business class. We specifically welcome Professor Dr. Kerstin Fehre, who is a professor at the Vlerick Business School and who is the author, together with Van Lin Hu, of our More GCF Mid-market Cross-border M&A Compass. A special word of thanks also to my fellow members of the study steering committee, John Cowie from More Kingston Smith in London, and Christophe Schlothauer from More Cofra in Paris. Today's ambition is to share with you our principal findings as regards the actual status and the evolution of the cross-border mid-market M&A activity. Cross-border mid-market, those are the keywords. Those are the niche we and my fellow colleagues at More Global Corporate Finance are focusing ourselves on, and in which niche we are active to help our clients develop and thrive. It is a very interesting study because today we're not only sharing the 5-year evolution, we are sharing things that are happening today in our market based on the 2024 data. There will be some time for Q&A at the end of the expose. The Q&A box is open, and I've been asked to mention also that you will be receiving tomorrow a evaluation survey, which we would be very welcome you to answer to, because it will enable you to download the slides of Kerstin. I'm pretty aware you are not waiting for me to have this introduction. You're waiting for Kerstin to share with us all her knowledge, all the know-how she has developed, and all the results of the study. So it's a pleasure for me, Kerstin, to hand over the word to you and ask you, how are we doing?
Thank you very much, Philip, for this nice introduction. Yeah, also a very warm welcome from my side. I would say we are doing good. Yeah, so I have quite some positive news to share with you today, and to see like how the market evolved in the past year. But of course, there's also a lot of uncertainty going on. So let's see how things evolve in the future. In the preparation of this webinar, I saw that for last year's webinar, we had the headline Cross-border Mid-market Compass in Times of Uncertainty. And I thought, well, maybe this year we could call it Cross-border Mid-market Compass in even more times of uncertainty. Or more uncertain times. But let's have a look. And this is a good thing because we are talking about a compass. And this is also the reason why we call it a compass, because we really want you to navigate you to the landscape of cross-border mid-market transactions. So a segment of the M&A market that is normally not that covered or in the spotlight of other reports. And therefore, I think we can really provide you some interesting insights that you don't find that immediately somewhere else in any other reports. And for this reason, we have foreseen the content today. So let me quickly go over the main idea and the general concept of the compass, but very briefly, just that you know where our data comes from. Then I will really focus and the backbone of this webinar will be the compass itself, so the findings of the compass that we just published a couple of days or weeks ago. So in there, we would like first to start talking about the M&A market in general, but really like to compare it with the focus segment, the cross-border mid-market segment. And then, of course, really focusing on the cross-border mid-market segment. So as I promised you to navigate you through this landscape, we will discuss the question like of where, what, who, and why. So where do these deals happen? Between which continents, which countries? What are the most active countries? What industries are most active or like attractive for in these deals? Who is involved, who's standing behind these deals, and then we why are these deals happening? So what are the deal motives, the deal rationales that we observed last year? And of course, we will wrap up with a summary and also have the time to answer your questions should you then still have any questions. As I said, let's quickly go over the main idea and the general concept. As I said, the idea is to navigate you through this very interesting niche segment. It's a focus of the study, as Philip already explained. I mean, we can separate or analyze the M&A market from various angles. We can separate it by deal size. So we have the large, the mid, and the small market. We focus on the mid market, but we can also, of course, separate because they are quite different in their characteristics, domestic M&A transactions from cross-border transactions, and we focus on cross-border. So this leaves us with the focus of the study on cross-border mid-market segments. I don't want to bother you with like all the definitions because we're coming from academia, but we try to make it as practitioners oriented as possible. But let me quickly highlight the 3 things that are important to know while going through this webinar. This is on the one hand, the question like, okay, what do we define cross-border? So cross-border means that one of the acquirer, if we have multiple acquirers, comes from a different country than the target company. Mid-market means that we focus on deals with a deal value between 10 to 200 million. So this is a rather conservative approach compared to other studies. And we are focusing on completed deals, so to take out a little like the rumors that are going on in the market and really just focus on deals that really happened in the year 2024. So enough about the definitions. With this, we are well prepared to then really like look into the findings. Let's start with comparing the cross-border mid-market to the M&A market in general. So here we have an overview of the last 6 years of the general M&A market. So the lighter blue bars represent the amount of deals that we've seen in the entire mid-market over the last 6 years. And you see, probably not a surprise, we had like a record year in 2019. We had a huge dump in 2020, like around like all the COVID-19 turbulences here. The market recovered in 2021, but then we saw a decrease over the last 2 years, 2022, 2023. And as I said, like at the beginning, that we have some good news to share. Last year, the market in general really recovered. So we're almost back at the level of 2022. So we really see an increase of transactions in the market last year. So the market grew by around like roughly like 12% in total if we look at the amount of deal values. You see the dark blue little fields on each bar here. This represents the share or the amount of cross-border mid-market M&A. And you see that we always trade around like these 10%. So we see that there is a 10%. One could argue, oh, this is rather like a small segment. On the other hand, it's also like a substantial part. We see that it is somehow stable over the last couple of years. And I should probably add that this is at least 10%, because if we look at the entire market, we also have a lot of deals where we don't know the deal value. And if we want to define them as mid-market, we of course need to know the deal value. So we can say it is at least around 10%. And there already we see a slight recovery compared to last year. But maybe more important, and what I would like to share with you, and the highlight is here, that the cross-border mid-market segment, so our focus segment, really outperformed the M&A market in total. So we saw like not only like an increase, but like even like a steeper increase compared to the M&A market in general. As we said, like we have like these 2 dimensions, the cross-border and the mid-market. We also had a look at just cross-border deals in general. So the pink is domestic, and we have like here, again, like in total, the total bar is the same as we saw on the dark blue, light blue on this slide here. And we see here that apparently there was a lot of appetite for cross-border transactions in 2024. So we saw also like a steep increase, so really driven by this by the geographical component here. Just maybe like, yeah, as I said, like we see at least 10% if we look at like the M&A market in total, where we know the deal value, so we can then split the market up in different components. So the dark blue box that you see here is representing the total M&A market. And if we split this up in the different size segments, we see that the large market is only around 10%. The mid-market is really like the backbone of the market. This is where like, the music plays, where like we see most of the deals happening. So we see more than 50% in terms of numbers of deals are happening in this mid-market segment as we defined it. And we see then the rest around like 37% in the small market. If we then now further if we put the second dimension, namely the regional dimension, we see that cross-border large market, cross-border mid-market, and cross-border small market. So our focus is here like this light blue shadowed segment, and you see definitely that this is really like a very interesting, also like a substantial part of the market. We can analyze this slide from various perspectives, and I probably don't have to convince you that the cross-border mid-market segment is an important one. Otherwise, you probably would not have joined the session. But let me still give you some more background looking at this from various perspectives. So if we look at the total market and just analyze it by the size number of these, we see the same numbers as I just shared, like the 53 for the mid-market, the roughly 10% for the large market and the small market. Of course, and this is what you see on the right side, the pie chart on the right side of the slide. If we look at the deal value, then the picture looks a little bit different. By deal value, this is then, of course, most eaten up by the large market, but still, like mid-market, a substantial part of 14%, and the small market makes only up for like the remaining 1%. If we have a look at then the cross-border element in combination with the size, we see that cross-border mid-market M&A here, we're talking about 61% of the deals happening within the segment. And if we look at the deal value, we see that this makes up already like 23%. And here it is also important to mention that this is a number that we saw increasing over the last year. So in the year before, so 2023, this was only around 20%. We see here that the deal value for cross-border mid-market was also relatively increasing. But we will talk about deal values in more detail in about a couple of minutes. Then if we have a look at the mid-market, mid-market M&A, as I said, is around more than 50%, 53% mid-market M&A, and then 38, so almost 40% of the mid-market deals, they happen in this cross-border segment. But we can also, of course, and also here, sorry, here forgot to mention, like the 38, also there we saw an increase. In the year before, it was around 35, so we see an increase of 3 percentage points. So actually also there we see that this segment, like the cross-border segment, got strengthened in 2024. If we then switch the perspective and start from the cross-border element or the regional element, we see that 33% of all deals happen within the cross-border segment. So we're again here looking at the M&A market in total, and 33% of the total M&A can be considered as cross-border deals. But here, when we just look at the cross-border deals, we see then again that the majority is happening in the mid-market segment, so namely 61% are happening in the cross-border mid-market segment. I promised you that we will not only talk about the deal numbers, like how many deals happened in the last year, but also have a look at the deal values and how the deal values evolved over the last 6 years. And also here, I think we can share some interesting results and also some positive results if we have a look at our focus segment, the cross-border mid-market segment. But let me guide you through this slide here. If we start at the top of the slide and we have a look at the dark blue line, this is the total global M&A market. So these are the average deal values for the total M&A deal market. And you see also there we saw quite a rally with increasing average deal values over the year. We reached the peak in 2022. The year before, 2023, we saw a steep or like a deep decline. It was falling from something around 180, 185 to 150. And we see that last year, not only the number of deals in total increased, but also the average deal value of all M&A transactions. So the average of all M&A transactions increased again. This is what we see with the dark blue line here. So we are almost back. Also here, if we take the reference point of the peak in 2022, we are almost back at the level of 2022, not yet fully. So we are talking about 185 compared to 178 or 79. So, but on our way. If we now look at our focus segment, the picture looks a little bit different, and there are like several effects for this. So our focus segment here is the light blue line, the cross-border mid-market M&A, the light blue line. We see that there is also some fluctuation in there. It is less. It is like but of course, there are two effects. One is like the graphical effects. As long as we have like the total M&A, of course, it has an impact of the way we just visualize it. But also here we of course talking about a corridor, because we have our deal value and deals happen within this corridor of deal values for the mid-market segment. So we cannot fall out of fall below this corridor. So there we also see like a kind of a smoothing effect. But still, I would say we see that this market follows its own logic. It's a little bit more resilient compared to the M&A market in general. And we see that for this year, like 2024, so the year that we are analyzing, we saw that average deal value was really increasing compared to the previous year. And as I said, that for total M&A, we were not yet fully back at the record year of 2022. We even outperformed with the cross-border mid-market segment. We outperformed this record year, and we have like a higher. We see like a higher average deal value with an average of 50.6 million on average for this segment, so higher than the year 2022. And it's also like the second highest average deal value over the time period that we are analyzing these last six years. So this was like more like what has happened in 2024. But of course, we also want to know, can we read something between the lines? Can we learn something from the past for the future? Of course, everybody is curious and wants to know how the current year 2025 might look like. And for this, we saw that in the past, if we analyze for once not the completed deals, but the announced deals, that it always gives us a kind of a good indication on how the upcoming year might look like. And so we did also for 2024 to get an idea of how 2025 might look like. And for this, we looked at the announced deals per quarter. So we have a quarterly analysis. This is what I would like to share with you now. So here, on the left side, you see the amount or the number of announced deals per quarter in 2024. And on the right side, you see the announced deal value per quarter, again, for the different market segments. On this slide, we see dark blue M&A in total. And then we have large market, mid-market, small market. So on this slide, we still don't look into the regional component. We just look at like the market in total. And again, separated then by market sizes. So maybe here we just look at the M&A market in total, and we see that it was we saw a little bit more announced deals in the second quarter compared to the first quarter. We saw a drop in the third quarter, but then we saw an increase again towards the end of the year in the last quarter of 2024. We saw again more announced deals compared to the previous quarter. So from a total perspective, we could say that probably we could interpret this as a kind of a cautious optimism, saying, okay, well, probably there was an upwards trend towards the end of the year, and normally this should indicate that also this year, 2025, that we will see quite some M&A transactions. But of course, things have changed already like very fast in the last couple of days, but this is probably something that we can also discuss later. If we have a look at the right side of the slide, if we look at the announced deal value, we see a deep or like a very deep decrease from Q1 to Q2, but this is really like due to several outliers. Announced deals in Q1, there were like 2 very large deals announced in the first quarter 2024, so this is why we saw this huge decrease. So this was really like a more kind of outlier effect. So let us look now more like also like at the segment that we are interested in, namely the cross-border mid-market M&A. So here we look at the green line, and also here we see that we saw quite some variation throughout the different quarters. We see also the same drop in the third quarter, but a recovery towards the end, the fourth quarter. So also again something that I would call like this cautious optimism of recovery there. And then we just like took out the large market. It's the same, just to visualize it a little bit better. So we compare like the mid-market and the small market, and we add the cross-border element there. But it is very much the same picture as we saw on the previous 2 slides. So this is what I promised you, that I said I would like to put the cross-border mid-market segment, so our focus segment, into the perspective to the total M&A market. Let's now really deep dive into the cross-border mid-market segment and understand like the where, the what, the who, and the why behind these deals happening in the cross-border mid-market segment. So first of all, we are of course interested to see like, okay, but where do these deals happen? If we talk about cross-border and we're saying, okay, this is at least one party needs, like the one acquirer needs to come from a different country than the target. So the question is, of course, like who is interested in which? And we see here, or what are the deal flows? And we see here from a continental perspective, we have on the left-hand side, again, the numbers of deals, so continent of acquirer, and on the right hand we have the deal value, and we see here that last year 2024 almost 50%, so 48.4% of all cross-border mid-market involved acquirers from North America. So I think this is quite an interesting number, almost 50%, and this is also something that reconfirms what we've seen in the past, that North American acquirers are the most active in this cross-border segment. However, it is also like a huge increase. So like a year before in 2023, we saw something around 40%. So we see that this is not only reconfirming what we've seen in the past, a huge involvement of North American acquirers, but even like further strengthening it, and really like, yeah, like almost the majority of deals involve like acquirers from North America. And it's almost the same if we look at numbers and deal values, even for deal values, or even like a slightly higher. And then the second most active acquirers come from Europe. So if we have a look at this, and we also see like from an acquirer, from a number of deals perspective, we see that more than around 75% of all cross-border deals involve acquirers from the US or from Europe, and from a deal value is even slightly higher. We talk about 77%. Second most active is then Asia, still also with numbers around 20%, and we see like South America, Oceania, like only taking up, and Africa only taking up like rather small proportions of this. But we will talk about Oceania and Australia in particular, so in a couple of slides, to also already give you like a sneak preview. If we now have a look at the continent of the target, so saying, okay, but where are the targets coming from? We see a slightly different picture. So we see that Europe and North America are almost equal. but the targets are mainly coming from Europe, so a little bit more targets coming from Europe compared to targets coming from North America. So we have here 29% compared to 28%, and the same also from a value perspective. So here we see a little bit more like a kind of a more balanced picture. Yeah, so we could very roughly say that it's a quarter across like North America, Europe, Asia, and Oceania. But we will, yeah, so this is what we see like here, like a different perspective. So like from a target perspective, the interest in targets seems to be like a little bit like spread all over the world. If we now deep dive into the different continents, so let's start with the continent that is the most active one, namely North American acquirers. So we have here like different perspectives. So if we look at the top 3 acquirer countries within North America, probably not surprising, we see that the United States are leading this, and we have then Canada following, and some more like probably financial cosmetic from the Cayman Islands here. And then if we have a look at in which targets these acquirers are interested in, we see that for acquirers from United States, there is a huge interest in targets from Australia. This is something that we also saw already like in the previous year. And this is probably related to when we see also later in what kind of industries the deals are happening. There seems to be like a huge interest in raw material, in metal products, in like in earth reserves that we find in Australia. Also interesting, something that we see for the first time is that India is among the top 5 target countries for acquirers from the United States. And given that the United States plays such a big role in North America, this picture looks very similar if we look at the top 5 targets from the continent per se. And here we see also like then on the next, and we see also like from a target continent perspective, like kind of a very balanced view on the different continents. Switching the perspective and looking now like deep dive on the European acquirers, so the second most active one, European acquirers, we see some other interesting aspects. So we see a strong interest in targets from other European countries, and also we see an interest in Australia. So, but let's go through it step by step again. So if we have a look at the upper right corner, the top 5 acquirer countries within Europe, we see that United Kingdom is the most active one. And I should probably mention for Europe, we look at geographical Europe here. We have a separate analysis for EU later. So geographical Europe, we see the most active one is United Kingdom, followed by France. We see Switzerland for the first time, but at a low level, in Germany and Sweden. So like we see like here like rather low levels. And of course, if we have a look at the amount of deals, this might switch from one year to another. If we have a look at the top 5 target countries, so where acquirers from the United Kingdom are interested in, we see that UK acquirers have an interest in United States, also in Australia, and then also like within European, so France, Germany, and Spain. Quite similar also if we look at European countries per se, like entire European acquirers coming from European targets, but we see here the more interesting is probably this one. If we have a look at just like the target continent, so then we see that we like Europe has a strong interest to do acquisitions within Europe. So we see European acquirers doing almost 62 or like more than 60% of the acquisitions happen within Europe. And as I said, we will look at this also like in a minute from a European, from an EU perspective. But first, let's have a look at European targets. So also here we see similar countries popping up: United Kingdom, Germany, and France as the top 5 target countries. The acquirers from 4 United Kingdoms are mainly coming from the United States. And if we have a look at Europe per se, it's also like a strong interest from acquirers from United States, and then again happening within Europe. And so here we see like also a number around 60%. And last but not least, I promised you to have a look at the deep dive in the EU targets by number of deals. So here we see, here we only looked at EU parties involved, and we see that here is we like reconfirming what we already like saw for Europe in general, but for EU we see that is that even higher, that there's a strong interest within EU. So like we like deals happening within this geographical boundaries of the European Union. If we now look, we go like also like we have like our value to volume ratio by continent of acquirer and target. So this means that we look at the ratio between the deal value and the deal volume. So this means if the value to volume ratio is higher than 1, then the continent has a relatively higher deal value per deal, and vice versa. And here I would like to just highlight some aspects, and maybe let's have a look directly at the longer periods here as target origin. So we see for North America as a target, we see a decreasing value to volume ratio over the last 4 years. And we see the difference, we see the opposite of Oceania, and I also already mentioned it. There seems to be like a strong interest in targets from Australia, and this is also then represented here in this value to volume ratio with an increasing value value to volume ratio for ASEAN targets. This is like what we say like about like this, where is it happening? We have like also like a deep dive on the countries or like the geographies where more global corporate finance is active in, but this is mainly like reconfirming what we have seen in general for the European analysis, like United Kingdom, France and Germany leading in both perspective from an acquirer and from a target perspective, and also we see that United Kingdom, we see like more than twice the amount of deals happening than within France, and similar like also like if we have a look at the target perspective here. But as it's more like we like reconfirming what we've seen on the previous slides. You're probably like also wondering, and I also gave already some indications here and there on where are these deals happening, so in which industries, so what are the most active or attractive industries. I have here now the comparison for cross-border mid-market M&A in general from the year before and last year 2024. So the blue one is 23. The pink one is 24. We see something that is reconfirmed like over the last couple of years, not only in these 2 years, but throughout the entire time period that we do with this compass already, that there is a strong emphasis on IT and health. We saw that there was like the highest average deal value for banking, insurance, and finance in the previous year. This year, for the first time, we see that metals and metal products are among the top 5 industries. IT and health again. We see also for IT and health that the average deal values are increasing again. We saw a slight cooling down in the year 2023. We see that there's not only like a strong interest in targets, but also like from a time amount of deals, but also like from an average deal value. And for banking, insurance, and finance is where we saw the highest average deal values in 2024. Looking that now at the North American and the European separately, we see also for North American and European IT and health, both in both continents, most active and most attractive ones. Metal and metal products also from the North American acquirers, very active there, and not only from an amount, but also from an average deal value. And we have the wholesale and retail trade in Europe. This is a sector that was like already there a couple of years ago, dropped out and is back. But you see, we're only talking about 4% of all deals. So it's probably not like an overall trend. It's probably also like due to some outliers. If we have a look at like, okay, but who is driving, who's standing behind these deals, we looked at the ultimate owners of these cross-border mid-market acquirers. And we see that non-financial buyers are the most active ones, 60% compared to 30% financial buyers. And here, when we have a deep dive or the zoom in the non-financial buyers, we really see that this is mainly driven by corporates. So 75% of the non-financial buyers are really like corporates standing behind these acquisitions. If we do the same for the financial buyers, so if we look at the financial buyers, it's 40%, we see like a kind of an equal split amongst like three groups. We see that 32% is mutual and pension fund. We see another almost 30% for banks, and we see another almost 30% for venture capital and private equity. And I should probably mention, if we say banks here, we of course consider like a bank acquiring another bank as a corporate deal. So it's not here within the financial buyers. This is already appeared on this slide then here. So this is like, well, when we looked at like, okay, but who is standing behind this? And then I also said like that we would also understand about, okay, but what are the reasons? Why these cross-border mid-market deals? What are the deal rationales? And for this, we did for this year like a new analysis. We applied something that is called topic modeling. I don't know whether you're familiar with this technique, but let me quickly explain. So what did we do? We analyzed all the deal rationales that were mentioned for these cross-border mid-market deals, and we applied like artificial intelligence, like a language model, to see what are the terminologies that appear more often together. What are the relationships between or like within these different deal rationales? What is mentioned most? And then you get like kind of word clouds, seeing, okay, these are the deals that are or like the words that are appearing all together in different bubbles. And this helps us, and of course, to understand what is mentioned in these deal rationales, what is used as an argument why these deals happen. Of course, we cannot read like the more than 1,000 deal rationales all at once and try to find out something. So we are really happy that we can use like IT here to help us to understand this a little bit better. So here I can show you like this 6 most important topics that we identified in this technique. You then also have like other topics that were like one a little bit, okay, but what is this? But here I think we have quite some that help us to understand really like the reasons behind these deal rationales. So it is reconfirming on the one hand really like this interest in IT and healthcare. So we have at the upper right corner, we have something around gaming. We have gaming here. So this seems to also like in this IT industry, but maybe even more important in the upper line in the middle, we have crypto financing India. So we can interpret this as like, okay, deals happening within India. There is a high interest in digital finance, crypto financing. So really, again, reconfirming this interest in IT. We have other, again, also like from this release, it's also in the middle, in the upper release, going like a lot of apps and so on around this IT rationales. And in the upper right corner, we really have like what we see from like this IT interest, like investor, patient, drugs, clinical. So this is really like around this IT interest. But of course, also like a very traditional topic in the lower right corner, we have the company market, business growth. So really like more kind of topics around like really like we see that there is an interest in just like very traditional deal rationales, that companies are interested in consolidating the market, in having access to market, in growth opportunities for different companies. One is that I left out so far is the upper right corner, no, the lower right corner, sorry. Here you see like energy, sustainable, clean, renewable. So this seems to be all around like the sustainability topic. But interestingly enough, it seems to be like all around like this energy transition. This is when deals happening within sustainability. It seems to be for reasons of the energy transition, that we have a separate analysis on this topic of sustainability also in a couple of slides. We did the same analysis then for deals that were driven by private equity and venture capitalists, because we wanted to understand, but okay, do they have maybe different topics that they are interested in? Because like corporates, of course, have all their individual reasons. I mean, if you are a food and beverage company, you have probably different reasons than if you're like an automotive company or if you're like an energy company. But maybe just to see like, are there some trends that we could identify for private equity and venture capitalists? So we did the same analysis. We applied the same technique for the deal rationales of deals that were done by private equity or venture capital involvement. And here we see, indeed, we see some similarities, but also some differences. Out of these 6 topics, I would say we have like 3, 4, 5 that really focus on growth. Growth on the company, of scaling. So we have like, of course, like the investor, the founder, the platform. So looking for a platform investment founder. They're looking for experience team or experience in the market. We have the topic of market of growth, scaling on the in the other box. We like and also like here we have the topic of digitalization popping up. We have something that is also apparently linked a little bit to healthcare. We have cancer, but we have supplier procurement. Also the topic of access to supply and procurement seems to be a driver behind this. The product, the platform, again, is in line with the traditional really like growth potential. And again, also the therapy and clinical support, patient therapeutics. So we interpret this as we see that there's this really like this value for growth potential, and especially in the healthcare sector. I promised you that we have a deep dive also on the topic of sustainability, because it is since a couple of years like a hot topic, not only in M&A, but especially like in the business, in the corporate world per se. And as we had like also like here in the topic modeling, we saw that one box at least was around like sustainability. We wanted to see like how this topic evolved over the last years. This is an analysis that we did already 2 years ago for the first time. And we see interesting things happening. For the first 3 years, we saw like an increase, no matter, and I don't want to go into the details of all the different segments, but I think at a very low level, we are talking about 2, 3, 4% of deal rationales. They contain words that are centered around the topic of sustainability, be it like environmental, be it sustainable. So all these, we have like we apply a dictionary that says, okay, these are words that fall under the umbrella of sustainability. And when we then analyze the deal rationales, do they mention sustainability related topics? And we saw at a very low level, but increasing. Then in 23, we saw that there was a drop for almost all segments apart from the large market. But interestingly enough, in 2024, we saw again like an increase for cross-border M&A. We saw a drop for the large market M&A, and we saw a huge increase for cross-border mid-market M&A when it comes like to deals rationales that mention the topic of sustainability. And then we were like, okay, but who's again standing behind this? And then we had a look at like these M&A in general, cross-border M&A and cross-border mid-market M&A, and analyze like who are the parties involved here. And what we see then on the right-hand side of the slide is that for M&A in general, around 40 to 50, 55% of the deals involve a party that comes from geographical Europe or the EU. If we go for like cross-border, this number is even higher. We see there that almost 80% or like 60%, depending on whether we look at geographical Europe or the EU, one of the parties is coming from geographical Europe or EU. And if we look at the cross-border mid-market M&A, we see also there it is around 60, 70, almost 80% of these cross-border mid-market M&A deals that mention a sustainability-related word in their deal rationale, that they are like have parties from EU, be it geographical, or from Europe, be it EU or geographical Europe. So I think it's a quite interesting finding that we wanted to share with you that, so sustainability there is like a little bit like an increase, but still at a low level. So we see sustainability might be one reason, but only one of so many other good reasons to engage in M&A and cross-border mid-market M&A in particular. But when it comes to deal rationales that mention sustainability, then we see that apparently this is really like driven from an European perspective. However, of course, you're now wondering, but okay, but what is written there in these deal rationales? When we look at these, so we were like, of course, interested is this more like a kind of a cosmetic aspect that we now need to mention? And this is also in line with our sustainability ambitions or whatever. Or are there really like deals driven by this? And I can just share a couple of examples. So we see then here, for example, deal rationale where they say like, okay, by removing barriers to investment in the hydrogen sector, so like an acquisition that was done from the hydrogen sector, a critical nascent market on the route to net zero, we are creating a sustainable platform from which we to finance additional green hydrogen projects. So really like seeing something that is really driven by the sustainability aspect. Same here for this one. We are not only going to continue producing innovations that will support a sustainable national energy transition, but we also aim to transform into a world-class company. So really, like, as I said, already like the energy transition. However, it's really not that now suddenly all of these deals happen with due to sustainability. We also see a lot of these deal rationales and mentioning next to, oh, we did this for this and that business reasons. And by the way, we think that target and acquire really fit well together because we have the similar cultural and operational values. And by the way, also like aligned with our ESG framework. So like, as I said, more like a kind of like, okay, due diligence check mark. Okay, we also looked at whether we fit from an ESG regulatory environment. So we see both, but as I said, it's probably interesting to share. Looking at the time, I would say it is time for our summary. I think there was a lot in there, quite a heavy lunch break probably for some of you, but I hope we did a good job to as I said, I promised you to navigate you through, but let me just to summarize some of the main findings. So we see for 2024 that the total M&A activity is carefully recovering, so almost back at the level of 2022. We see that especially cross-border mid-market, so our focus segments, it remains a niche, but it's really like an essential segment that has its own logic. And in 2024, it was outperforming the general M&A market, not only in terms of deal numbers, but also like in terms of average deal value increase, so really like outperforming the previous year. We see that the quarterly analysis provides a kind of a humble recovery outlook, but there I have to really say, I mean, this is something, we did the analysis like at the beginning of the year, we worked on it, and I think the last 27 hours probably taught us that we have to revise this a little bit and maybe go much more into the details than by just looking at what has happened in the quarterly outlook, but also happy to discuss this then like in the Q&A on how the view has probably slightly changed in the last couple of days or weeks. We see that North America and Europe are the two most engaged continents in cross-border mid-market M&A, and probably also very interesting is to see that these European deals happen mainly within the European market. We see this high interest in targets from Australia, probably in a combination with the interest in the resources, and throughout the last couple of years that we do this cross-border mid-market compass or report already, we see that there's strong interest in IT and healthcare, and this was reconfirmed this year, not only in terms of numbers, but also in terms of increasing deal values. This is what I wanted to share with you. And I would say with this, I would like to open up the Q&A. Thank you very much.
Thank you, Kerstin. It was very, very interesting. I'm very happy that we have Michael Schellekes joining us. Michael is a partner mid-market M&A with our team in more corporate finance. He will be summarizing the Q&A. I hope all questions have been passing through the Q&A box, and if not, the Q&A box is still open. So Michael, where are we standing regarding questions?
Well, I have to say, Kerstin, that your expose was crystal clear. So we get 0 questions today up until this moment. So thank you very much. I have to say, I'm impressed by the way you can crystal clear summarize a huge amount of data. So thank you for that.
Thank you, Michael.
However, I still have a question. One of the things that struck me, and you hinted to it already, is the fact that the US acquirers are so strong, and not just strong, but I think they had like more or less a 15% increase in their activity as part of the cross-border M&A. And I was wondering how you are looking at this. But obviously it's a very difficult question because we are looking at 24. There will probably be some good reasons why they were so active the past year. And at the same time, if you just look at the past weeks and even the past days, the world has changed, I think, from a US perspective specifically. So I was wondering, first of all, what is your view on the activity last year from US acquirers? But also maybe to have a view in your crystal ball, what do you think of what may happen based on the last hours we have seen and what's happening in the US?
Yeah. Thank you very much, Michael, for this question. Indeed, I think there's also something that we were, of course, wondering while we were working on the analysis and the data collection and data analysis. But of course, also we were like working on the report, and now we just published it, and suddenly we have the feeling that the world is like upside down. Let me focus on the first part, on what has happened in the past. As I said, we have always seen like this very strong activity from US acquirers, and I think this is not surprising, given the two things, like the power of US companies, the power of venture capital, private equity, financial investors of the US, and probably just also like a cultural element in there. There's we see a lot of activity in the US, but still, we were talking about something around 40% in the previous years, and suddenly we're almost half of these deals with a US company behind. So therefore we were also okay, wondering what might be the reasons. We don't have the exact data in our results, but of course we looked into other data. We tried to make up our mind, and I think there are several reasons. And I almost don't dare to use the word, but I think there's a trade explanation, but trade in a different sense. We see that there was a lot of cash in the US, and they were looking for opportunities to spend the cash. Next to it, we saw a valuation, and all these three things are of course tied to each other. So the trade, the cash that they wanted to spend. We see from a valuation perspective, we saw that the PE ratio of US firms were higher than for non-US listed firms. So there was of course then the opportunity to use this discrepancy to also acquire a little bit cheaper. And we had a strong dollar last year. So that was also again another reason for probably this huge interest in acquiring outside of the US, due to cheaper evaluations, or I don't want to call it, but let's call it these shopping opportunities. So I think there were mainly also a lot of financial reasons why we saw this huge interest and activity from US investors outside of their own regional borders. Of course, you opened up already the floor for okay, what comes next? How might the future look like? And as I said, we had this statement of this cautious optimism. And I was of course with what was happened in the last couple of days, maybe even weeks, of course, wondering, okay, but what does it tell us now? Is it still valid to say cautious optimism? And I would say yes, but more that things are shifting, and we still see things probably differently. On the one hand, I would say this cautious optimism will probably get a severe damper, because with all the announcements that came from the other side of the world in the last couple of days, it creates a lot of uncertainty. It creates regulatory uncertainty, it creates policy uncertainty, and it creates also probably even more than uncertainty, it also creates a lot of confusion. So on the one hand, I would say this additional uncertainty, and there's on top at a top something that is everything will make things a little bit everything will take longer, because now the due diligence, you will probably not turn every stone twice, but maybe 3, 4, 5 times. You have to have really special expertise. I mean, I'm really looking at you and Philip here. So I think about also like there is really like a need to have like the experts on board. So people will have to have like experts to help them like, okay, but what is now the impact of like these trade barriers on our valuation? How will our model change? So again, here things will require more effort, and of course things will take longer then. And I would also expect that some of these announced deals at the last quarter will probably even that they will talk longer, or we will be put on hold until people are able to see a little bit clearer, or simply because they're currently occupied with simply other things that require all the management attention, and probably maybe this is suddenly not the first priority anymore. So this is on the one side as, okay, things will maybe take longer or will maybe be put on hold. On the other hand, we see something that we have seen already like in the past, and this is still there. We see private equity, then we see a lot of dry powder, and with this volatility in the market, there's probably like also like some quite of interesting opportunities to enter, to enter and to finally spend money. We have seen already over the last 3-4 years a longer average holding periods, and really like a pressure to exit now. So there is still like this economical reason or logic to do something. So I think this will also counter affect the dumping effect from the other side. And then so we have also maybe like and then I would say like with all this that there is also like a need to still do something. I would rather say that we will not see like a completely cooling off, but rather like a switch in the kind of deals that we will see. So I would expect that with the trend that we've seen in the past for IT and healthcare, I don't see any reasons why this should not be there in the coming year or the coming years. I think there will always be like a strong interest. Getting access to resources and securing access to resources will probably also be and securing supply chains and everything will probably be like a good reason to engage in cross-border M&A activities. I would expect that there's more like a kind of more like a regionalization, but this is something that we anyhow, I mean, saw already. So I would expect like this, what we saw like within Europe, that there will be even more deals happening within Europe. And last but not least, I think there will also unfortunately be quite some opportunities in distressed assets. I don't know whether you or Philip would like to add something on my looking into the crystal ball, Philip.
Thank you for handing over to me, Kerstin. I'm going also to make a little bit of a closing remark afterwards. I'm fully on the same wavelength as your view on how Trump now will be having his influence on the M&A market. I would like maybe to add one element. We have seen over the past years, and it has been demonstrated also in this year's survey, that large M&A deals are following macroeconomic cycles. SME transactions and mid-market are doing less of this. So the underlying deal rationale for the large deals has a link with the macroeconomic world. The deal rationale in the mid-market has probably the same link, but this will not be jeopardized when the macroeconomic environment is shifting. What will be shifting is how the transaction will be structured, and maybe probably who would be the acquirer if you want to sell anyway, or who will be the target if you want to invest to develop your company anyway. So fully in agreement with your summary, fully in agreement from my perspective, which is not an academic perspective. It's just being in relation with investors and sellers. That would be my expectation. Very much thank you, Kerstin. Very much thank you, Michael, also for your involvement. I need to close this because we try to start at the exact hour and we try to stop at the exact hour. It has been very, very interesting. All of us, we will be receiving the survey. I hope the reactions will be in line, and also that people can then download the slides. And of course, there's always a link to the full report, which is even more interesting if you take the time. But a summary of 1 hour. Thank you very much, Kerstin.
Thank you very much, Philip, for having me. Thank you so much for your trust in our research. Thank you.
A pleasure, and I hope that everybody has had found some answers to questions and will find the rest. See you everybody in the near future,
Bye-bye.
and have a nice day.